Welcome back to the Detailing Business channel. It's a rough time of year for us business owners. It's tax time. I dread tax time. I hate it. But it's really not that complicated if you just think of one thing that you're eventually, as a small business owner, gonna hear. Hey, Mr. Detailing Business, we're from the IRS and we want to see some documentation. Remember that. Now, I'm not a tax attorney or a tax accountant, and I'm not going to tell you what to do, but I will tell you what I know over the past 20 years of filing taxes as a small business. Hey, before you do anything else, do me a favor, go down and hit the like button if you would, to get that algorithm going, and let's get this video going here, please. And if you haven't yet, go ahead and hit the subscribe button so you don't miss the next video. The first thing you should be doing as a small business is filing and sending in your estimated quarterly tax payments. There's a form called 1040-ES. This is where you file your estimated quarterly income tax payments. On that form, whether it's the federal form or the state form, if your state collects income tax, there's a bracket that tells you what your income is. Put yourself in one of those income categories. Let's say you're going to make $50,000. There's a spot there for it. It tells you the tax percentage in that bracket and what you would be paying in income tax. Divide that by 4, and that is your quarterly estimated income tax payment. Start saving in a savings account money to write those checks so that you don't even miss it when you write that check. Send that off to the IRS. Another thing you need to know is taxes are as simple as income, expenses. Expenses take away from your income, which gives you your taxable income. You want your taxable income as low as you can get it. You do that through tax deductions. One thing you need to remember is if it's a business deduction, it is what it is. If you have the documentation to prove that it was for your business and it was in that tax year, it is what it is. It's an expense. There are costs to running a business. The IRS knows that. You need to account for all of those costs. To account for all of those costs, you need to have an orderly fashion to track all of those things. If you buy a polishing pad, keep that receipt. As far as receipts go, when the IRS knocks on your door, he doesn't want a trash can full of hard copy receipts that have bounced around your truck and the ink's worn off of and you can't even read it anymore. They want electronic receipts. When you make a purchase, get your receipt or email it to yourself or immediately take a picture of it, save it on your computer at home in the appropriate file for your expense receipts. The more receipts you save, the lower your taxable income will be. Save every receipt and you'll have no problem when the tax man comes knocking. Not only do I keep every receipt in a specific folder on my computer backed up, I also have a spreadsheet that corresponds with the Schedule C, which I'll talk about in a minute. Every category on here is on my spreadsheet. One thing I do to fortify my tax records is I pay all of my expenses out of one account. You could either have your own separate checking account with a debit card or whatever, but what I like to do is I have a couple business credit cards that I use for expenses only. This way I get the cash back rewards from a business credit card. At the end of the month, I like to pay those credit cards off in full so that I'm not charged the interest. If it's your first year in business and you've never done business taxes before, it would be beneficial for you to hire a tax service. Somebody will be there to help you put into the boxes the necessary boxes and categories of each expense, and they might even tell you that there's a deduction that you didn't know about. They might tell you that that is not a deduction. But it's better that they tell you than the IRS agent. After that, once you're familiar with your business and all your expenses and all these forms and what the IRS requires, maybe you can do it yourself. Once you grow to a point to where you're making big money, over $60,000 a year, let's say, then it might be beneficial for you to get a tax accountant. Somebody that you can call on the phone, talk about taxes, answer your questions, come up with strategies on maximizing deductions. Maybe you have an idea or a purchase that you might make. Your tax accountant might say, this is not the year to make that purchase. How about next year? Or he might say, you better make that purchase now because you're about to pay a lot of taxes. If you're a sole proprietor or an LLC, a single member LLC, that means there's only one owner of the business, then you will probably be filing a Schedule C. The Schedule C is very simple. It's basically reporting your income and reporting your business expenses. Business vehicle expenses, business vehicle mileage, we'll talk about that in a minute. I'll run through here quickly on some of the expenses that might pertain to you. As far as income, line 1 is gross income. That is the total amount of sales that you brought in. That's probably all that you're going to use unless you're a retail business in the income category. Expenses. The first one, advertising. Most businesses, advertising is their biggest budget for the whole year. Advertising could be a business card, a flyer, brochure, a billboard, Facebook ads, Google ads, anything that advertises your business. Car and truck expenses. This is a big one for mobile detailers. You know, you have your detailing rig, truck needs to go into the shop. As long as it's your business vehicle, that's where those expenses go. Contract labor you might deal with. A contract laborer would be like a 1099 employee, somebody that you don't withdraw their taxes for them. They're not a full-time employee. Maybe you hired them for the summer, or maybe you hired them for a specific job. That would be contract labor. Depreciation, this is a big one. Anything over $2,500 that is an item that you use daily to do business, like a detailing rig or a very expensive tool, you can depreciate over time the cost of that particular piece of equipment that you bought. This might come as an advantage to you down the road, because if you don't have enough deductions next year, that depreciation kicks in from that big purchase you made last year. Insurance, other than health insurance. This is business insurance, liability insurance, garage keepers, tools might be insured, your business vehicle insurance as well. Interest, maybe you have a loan for some tools that you took out. You can deduct the interest on that. Business credit cards, you can deduct the interest from that. Mortgage, maybe you took out a mortgage to buy a shop or a garage. You can put that there. Legal and professional fees, maybe you hired somebody to write a contract for you. Maybe you have a trademark, you paid the attorney for that. That's where that goes. Office expenses, paper, pens, paper clips, ink, stuff like that. Rent or lease, if you go and rent a tool for the day, that's where you would put that. If you rent a space to do your work in, that's where that goes. It's also broken down into vehicles, machinery, equipment, and other business property. So you'll want to probably talk to your accountant about where which goes where. Repairs and maintenance. This is probably a big one. Your extractor breaks and you have to replace the pump. That's where that would go. Supplies for a detailing business. That's a big one. All your window cleaner, your towels, your pads. Travel and deductible meals. This is where, deductible meal may be between jobs and you stop for a lunch break at McDonald's. You could put that in deductible meals. Travel, that could be anything travel related to your business that requires you to travel. Maybe you go to SEMA in Vegas and you're there for all the seminars, soaking up all the knowledge. That is a business traveling expense. Utilities, this could be your cell phone to make appointments and phone calls. As long as it's business related phone calls, you can write off those cell phone charges or a percentage of that cell phone bill that has to do with business. Maybe you have a shop with electricity or gas, that's where that would go. Wages, if you have a W-2 employees, full-time employees, that's where that would go. Other expenses, anything that doesn't fit in these categories, that's probably where that would go. If you bought a tool that you can't depreciate, but you use it every day, that's probably might be where that would go. Onto your vehicle, if you have a business vehicle, you're a mobile detailer with a detailing rig. Keep track of your mileage. Every time you go to do anything for business, document those miles. Make sure you're very detailed on where you've been, what it was for, how many miles, because at the end of the day, if the IRS knocks on your door, he wants to see that documentation and make sure you're keeping good records. You can either calculate your mileage or you can write off the expenses of fuel, but you can't do both. So you have to pick one or the other. I like to keep track of my fuel expenses on a separate fuel credit card, and then I decide from there which one I want to write off, fuel or mileage. Once you get all that entered in, you'll have a net profit or loss. Many businesses in their first couple years have a loss. You have a lot of expenses and lower income. So it's not unusual for a business in their first year or two to have a loss. After that, you probably ought to be making a profit, or you ought to just close up shop. All right, I hope that settles some nerves and some anxiety about doing taxes. Remember, it's not a big deal. Just keep good records, keep everything documented, keep everything in order, send off those estimated tax payments, even though you don't want to. Do it anyway. You'll be better off. And remember, at any time, give me your documents. Have a wonderful day, and we'll see you next time on the Detailing Business Channel.